Welcome back to the Deep Dive, your shortcut to being genuinely well-informed. Today, we're taking a deep plunge into, well, some really interesting recent developments from Tanfac Industries Ltd. They're a pretty significant player in the Indian chemicals sector. We've got a good stack of sources for this deep dive official board meeting disclosures, a press release detailing their financials, and also the auditor's review. Our mission, like always, is to pull out the really important stuff from these docs, give you a clear picture of where Tanfac stands now and where it might be heading. So what are we actually unpacking today? Mostly focusing on two main things coming out of their latest board meeting and announcements. First, those very strong unaudited financial results for Q1 of FY26. That's the quarter ending June 30, 2025. And second, some pretty significant strategic moves and leadership changes. We're talking a new CEO, project updates, important stuff.
Exactly. And what's interesting, I think, is seeing how these connect. Our goal here is to help you connect the dots, really understand why these changes are happening now, and what it all could mean, not just for Tanfac, but maybe for the wider chemical industry in India, too. It's about seeing that strategic interplay.
That's a great point. It really is about the bigger picture sometimes. So by the end of this, you should have a really clear, concise handle on these developments. We'll give you the key numbers, the context behind them, some insight into Tanfac's strategy, all without, hopefully, feeling overwhelmed.
Okay, let's get into it then. Let's start with those Q1 financials because, wow, they really do jump off the page. Tanfac reported total revenue of 176.95 crore for that quarter ending June 30th. Now, just to put that into perspective for everyone listening, how does that stack up against last year? What immediately grabs you about that number? Well, it's an excellent place to start because that figure, 176.95 crore, that's an 84.6% increase year over year compared to the same quarter last year, Q1 FY25, when it was 95 crore. What stands out, just the sheer scale of that jump? I mean, 84.6% growth in a year is, well, it's huge.
Yeah, remarkable, really. It sounds like that new capacity came online at just the right time.
Right.
Hitting the ground running, you could say. And how did that top-line growth flow through to the bottom line? What about profitability?
It translated very well, actually. Their EBITDA, that's earnings before interest, taxes, depreciation, and amortization, including other income, that reached 29.91 crore,
Okay.
which is a 76.6% increase from the 17 crore they posted in the same quarter last year.
76.6%, wow.
And profit after tax, or PAT, came in at 19.35 crore. That's up 71.3% from 11 crore in Q1 FY25.
Okay.
And the EBITDA margin for the quarter was solid, too, recorded at 17%.
Those are really strong bottom-line figures matching the revenue surge. So what's the main driver here? Is it just selling more volume because of the new capacity, or are there other factors involved?
That's the key question, isn't it? And we actually have some direct commentary on this from one of Tanfac's directors, Mr. Afzal Malkani. He stated pretty clearly that, yes, the higher revenue and profitability were definitely due to the successful commissioning of their new hydrofluoric acid facility, the HF facility.
Right, the HF facility.
That project finished up back in October 2024, so it's had a few quarters to ramp up, and it clearly gave sales volumes a major boost.
Makes sense.
But he also flagged something else quite important: the timely commissioning of the initial phase of their solar-grade DHF project.
Ah, okay, the solar-grade DHF project. That sounds interesting. What exactly is solar-grade DHF, and what's the status there?
Right. So solar-grade DHF is diluted hydrofluoric acid. It's specifically purified for use in the solar energy industry, particularly, for manufacturing solar panels, cleaning wafers, that sort of thing.
Okay, high-purity stuff for solar.
Exactly. Now, the initial phase of this project, which has an annual capacity of 5,000 metric tons, that was commissioned just in June 2025. So right at the very end of the quarter we're talking about. It probably had only a small impact on these Q1 numbers.
Okay, just came online.
But here's where it gets more interesting strategically. The second phase, which will double that capacity, taking the total solar-grade DHF capacity up to 10,000 metric tons per year. That's already being implemented.
Already? Wow.
Yeah, and it's expected to be completed sometime during Q2 of this current financial year. So, pretty soon.
So they're moving fast on that.
Very fast. It clearly signals a strategic push into these new, potentially high-growth areas linked to renewables.
So it really sounds like they're not just expanding what they already do well, but they're very deliberately diversifying into these sort of emerging markets like solar tech. What's the deeper significance of that, do you think? Especially, with the global push for green energy.
Oh, it's highly significant. It shows Tanfac is leveraging its core strength, its expertise in fluorine chemistry, and applying it to tap into a market that's expanding rapidly and needs these very specific high-purity inputs.
Right.
This isn't just about adding a bit more revenue. It feels like positioning themselves in a really critical part of the supply chain for green tech.
The strategic bet on the future, then.
You could definitely see it that way. And speaking of strategic moves, this growth phase also coincides with some key changes in leadership, doesn't it?
It does. You're absolutely right. The board appointed Mr. Himango Gupta as the new chief executive officer. That's effective July 16th, 2025. What can you tell us about his background? What might that signal about the company's direction?
Well, his profile looks quite strong on paper. Mr. Himango Gupta, he's a graduate from IIT Varanasi, also has a PGDBM in marketing from IMI in New Delhi.
Okay, solid credentials.
And crucially, he brings over 2 decades of experience specifically in the chemical sector. He's held roles heading up strategy, business development, marketing, the key growth functions. His last role was at SRF Limited, another major player, where he was senior VP for sales and marketing.
So deep industry experience.
Very deep. The company explicitly stated they expect to benefit significantly from that extensive experience, particularly in driving strategic expansion and market penetration. Seems like a good fit for where they're heading.
Yeah, that sounds like a really powerful addition, bringing that specific sector know-how right when they're making these big expansion plays. It's always interesting to see how new leadership shapes things, especially in a dynamic field like chemicals.
And that wasn't the only appointment announced, was it? They also brought on a new secretarial auditor.
That's correct, yeah. The board approved the appointment of Mrs. Kalyani Srinivasan. She's a practicing company secretary. She's appointed as the secretarial auditor for 5 years, starting from this financial year, 2025-26, running through to 2029-30.
Right.
Now, this appointment still needs the green light from the members at the annual general meeting.
Which is scheduled when? Scheduled for Thursday, September 25th, 2025. But her background also seems strong, focuses on corporate advisory, deep expertise in corporate laws, SEBI regulations, basically ensuring strong governance continues alongside the growth.
Good governance is key, especially during expansion. Okay, so let's just quickly pull together the core insights from our deep dive today. First off, Tanfac Industries delivered a really impressive Q1 FY26, financially very strong. We're talking significant year-over-year growth. Total revenue shot up 84.6% to 176.95 crore. EBITDA jumped 76.6% to 29.91 crore. And profit after tax soared 71.3% to 19.35 crore. Big numbers.
Big numbers, yeah. And crucially, this performance seems directly tied to those strategic investments paying off. The successful commissioning of that new hydrofluoric acid facility back in October 24 clearly boosted sales volumes. That's point one.
Right.
And point two, the timely launch, even if just the initial phase, of their solar-grade DHF project in June 2025 also played a part and signals future contributions.
And alongside that, we saw those key leadership appointments. Mr. Himango Gupta stepping in as the new CEO, bringing, what was it, over 2 decades of chemical sector experience.
That's right, over 2 decades.
And the approval of Ms. Kalyani Srinivasan as the new secretarial auditor for governance.
Exactly. And the key takeaway, I think, is seeing how all these pieces fit together. You have strategic investments in new capacity, especially that ongoing expansion of the solar-grade DHF project, doubling it to 10,000 tons. You combine that with new experienced leadership, it just signals a really clear focus on future growth, doesn't it? Both in their core markets and these newer downstream product areas.
Yeah, it feels very purposeful.
Right. These moves seem designed to position Tanfac not just for, continued good financial results, but also to really leverage their fluorine expertise in emerging high-growth markets like solar energy. It potentially strengthens their whole competitive standing.
Okay, so wrapping up then, here's maybe a final thought for you, our listener, to chew on. Given Tanfac's really strong financial results, clearly driven by these capacity expansions and their commitment to developing new downstream products, what does this significant growth in specialized chemicals, particularly the ones linked directly to renewable energy like solar, what does that tell us about the broader picture, about the evolving landscape of industrial manufacturing, maybe particularly India's role in it? And what sort of ripple effects might these kinds of chemical innovations have on other sectors that you might be following? Something to think about until next time on The Deep Dive.